What's going on, everyone? Welcome back to the Modern Mortgage Show, where I interview mortgage professionals who share their stories and modern information about the industry. I'm your host, Rocco, and my guest for this episode is Josh Tullis, and he is the branch manager at American Financial Network out of Alexandria, Virginia. Josh, welcome to the show.
Oh, thank you. I appreciate it.
Thank you for being here. So Josh, why don't we start off the show? Can you just give us a little bit introduction about yourself and tell us a little bit about who you are?
Sure. My name is Josh Tullis. I'm the branch manager and owner of the Alexandria branch in Virginia under American Financial Network. We're known as the Tullis Mortgage Team. I got in this business about 20 years ago, back in early 2000, and just been pumping along ever since. I love what I do, so I'm very excited to be here and share any kind of the experiences and wisdom that I have after going through all the heartaches that we've all gone through.
Yeah, so you've been in the industry 20 years, you said. Did you do any work before you got into the industry?
I did. I started off doing construction, and that's actually how I got into this business. Is I got hurt and spoke to someone one night trying to sell them a house that I was actually working on, the last house I ever did in my construction company. And she offered me a job doing this as an assistant to her. So I went in for the interview. And the owner of the company said, "There's no way I'm going to let you be a processor, but I would love for you to be a loan officer." Didn't really know what that meant. So I said, okay. It was wintertime. Didn't want to be working outdoors anymore. So I started it. I was doing mortgages during the day and building houses at night. And then the owner of the houses I was working on said that it just wasn't getting them done fast enough. And he wanted to hire another crew that was bigger. So I went into the mortgages business full time, doubled what the original person had offered me to come on board in 6 months. And I knew that I'd be here for a long time.
So did you own the construction company?
I did.
Okay. So what made you really stick into the mortgage industry once you got in it? Was it the pay?
It was definitely. Everybody got into this business. If you've been in the business as long as I have, and some of the other members you've had on your show,
yeah,
it's all about the money in the beginning. And then you start to learn how what we do actually impacts people's lives. And that is more important than the money once you get caught up on all your bills.
Yeah, absolutely. I've just talking with so many people, I've realized that many of them, they all have an interesting story, how they got into the industry. And it's mainly for the money. But then once they got into it, there's other reasons. So let me ask you, what's the most satisfying or rewarding thing about your job as a loan officer, aside from the money?
I actually truly, a lot of loan officers will say this, but I actually do like helping people. I actually don't forget where I ever came from. I haven't been as successful as I am right now years ago. So I don't forget where I came from. And I don't mind taking the extra leap and helping the ones that nobody else wants to help, the harder loans, the lower credit scores, the people that need the down payment assistance. I would say one of the most coolest things is, even if it's doesn't sound pretty cool, but when you're at a restaurant or something like that with your family and all of a sudden a bottle of wine shows up and it's from a family that's like, without you, my family wouldn't still be here together, because now we have our own home to raise our children in, and they can come back to things like that. When you do loans for the children of the people you did 10, 15 years ago, because they still remember you and you stay in contact with them. That's really, really cool when I get someone to call and say, "You did my mom and dad's loan," or "You did my brother's loan, my sister's," what have you. That's really, really cool to me.
Yeah, it's definitely fulfilling when you see your service or what you do directly impact someone's life.
Yeah, I agree.
So you've been in the industry 20 years, you said. I'm sure you've gone through a lot of times. So what we're seeing right now in the industry, what you see happening right now, where do you see it going in the future?
Well, this one's tough to tell. There's the famous saying in the business, we don't have crystal balls, but I've been part of the government shutdowns, and it's a little bit different because eventually that's going to end. And people are going to get back paid, most of them. But with what's going on right now, nobody has any idea when it's going to be over with. So there's no guideline to say we can factor in this or this and everything's going to go back to normal in 60 days, 90 days, what have you. So this one's really, really tough. Fortunately for us down here in Virginia, and especially in the DC metro area, nothing is stopped. People are still buying houses every day. If your house is on the market for more than a week to two, you're probably priced too high because things are going as quick as they get on the market.
Interesting. So shifting gears here a little bit, when you first got into the industry 20 years ago, you were, transforming from owning a construction company to now becoming a loan officer.
Yeah.
What were some struggles that you had faced early on?
Some of the struggles were learning how to talk to people, becoming friends with people. That's the key to this business, is building a relationship and offering something of value to your clients. And ultimately, our client is the real estate agent.
Mm-hmm.
So that was very, very tough for me because I was used to being on the job site and being the boss and owning the whole thing. So I didn't like having people tell me what to do and actually having to come in to be told what to do and learn something new. That was my biggest struggle, but it was an ego thing. So I would recommend for any new loan officer to let go of the ego. Don't worry about the money, because success will come if you work hard at it and you give something back. It's not about a power trip. It's more of what can you do to help, because that means way more than money.
Yeah, absolutely. And when did you become a branch manager?
Well, I've owned a couple of mortgage businesses, and I've been a branch manager through some other companies for years, but this is the first one that I actually started from scratch. So by myself.
Interesting. And we kind of touched on this also. We just brought it up, but let's expand on it. If you were to talk to yourself, your younger self 20 years ago, or if you were to offer advice to new loan officers, what tips would you give?
Number one thing I would say is, number one, let go of the ego.
Mm-hmm.
Number two is do exactly what I have done. I don't mean every day, but find a mentor.
Yep.
You really need a mentor in this business that knows the ropes. And I've been very fortunate to have some great mentors in my life who have gotten me where I would not be here without a few people in the industry guiding me and pushing me, telling me that my way of thinking is not right.
Mm-hmm.
And it works. It really does. Not everybody does the same routine. Not everybody has the same plan. You got to find your niche or your path. But once you find it, find a mentor that is on that path and ask for guidance.
Yeah, absolutely.
This is not textbook. Our world changes every day. Every client is different. There is no textbook about how to do this business. You've just got to know it, feel it, and you have to want to be in this business. It's not about the money anymore.
Yeah.
The money's not anywhere near what it used to be. You really got to want to do this business if you're going to succeed. You got to be passionate.
Yep. And I agree with the coaching, finding mentors. What it does is it provides, they push you, accountability. Two, it shortens that curve. So if you were to figure it all out on your own, it would take obviously a way longer time than, having a coach or mentor. And perspective, like you said, it offers a different view of your business that you wouldn't look at it directly, more of a zoomed out view. So I think mentors and coaches are probably the most crucial thing in when you're first starting out.
Definitely very important, because this isn't like if you build the deck the wrong way, you can tear it down and rebuild it.
Yeah.
But in the mortgage business, you actually affect lives, and it's a domino effect. The house that your client is buying, they're using those proceeds to buy another house, and so on down the line. So if you mess up, it's not just, I'm not going to get a paycheck. You're messing with someone's life, and then that life affects another life to another life. It's very important to know what you're doing.
Absolutely. 100% agree with that. So in recent years, technology has made its way into the industry, technology, social media. How would you say this has affected you and your business?
Well, it's definitely helped us. It's made things a lot easier. When I got in the business, we would actually, it was great. We had a board that said kitchen table appointments. That was the best thing you could do. If you could get a kitchen table appointment, you knew you were in. Now everybody fills everything out online. A lot more business comes in a lot faster, and you can manage a lot more because you're not out running around and changing that fax paper. but it also hurts a lot of the loan officers now
Yep.
because everything is done for them. When I started off, we used to actually do the good faith estimate by hand, and we had calculators that figured out every line for us that we had to do. And you knew the products, you knew the loan a little bit better, you knew the person instead of just inputting in a computer and it telling you what your closing costs are, what your payment is. There are a lot of loan officers, unfortunately, don't even really know how to manually calculate an FHA payment. So
you're saying that technology, because of what it does and it streamlines tasks and automates things, it's actually hurting some loan officers?
I do think it hurts some loan officers in their relationship building and deepening their skills on how to do this business. But it also, on the other hand, it greatly helps everybody in the business, and from the new guy to the old guy.
Yeah, it definitely speeds up production. And I would say if you adapt to it, it can definitely help you and make your life easier if you're open to it. And if not, then you're going to get left behind. Kind of how we were talking about that.
You have to adapt to it. There's no other option. You have to, because that's just where we're going in this world.
Yeah, like we were talking about, you were touching on the ego. Some loan officers that have been in the business a long time, it's their ego that won't allow them to adapt most, is what I find.
Mm-hmm. I agree.
So are there any modern strategies that you're using in terms of technology or social media to maintain better relationships or just systemize and organize your business?
Well, I think we're ramping up on social media. Social media is everything nowadays because everybody checks it when they have 10 extra minutes in the day or at night when they're relaxing. It's almost as important as TV. People find social media as relaxing instead of watching TV. So we do a lot of marketing on that. A lot of face-to-face up until COVID-19 came out. But mailings are great. And then it's just basically touching bases with your clients. You have to stay in touch with them. I like to say I don't lose a deal, because even if I turned the loan down 6 months ago, I'm going to call you and I'm going to see how things are. And that's part of working you from the front of the mailbox to the back of the fence. I'm your guy for that. And that's what I try to teach all my loan officers to do, is always follow up with your clients.
Yeah.
No one just calls because they think they might want a house. They called you because they do, whether they want it now or in 6 months. We're going to do whatever we can to help them get to that.
Yeah. Staying in front of them and follow up is crucial. Is there a way that you manage the follow up, and are you guys using a CRM or anything like that?
We use CRMs, and I have a great team behind me. That's the number one thing, is don't be afraid to invest into yourself and your team, because together you will make it grow and you won't have to worry about anything.
What CRM are you guys using?
We use a couple of them. Now we're switching over to American Financial Network. We're still building a custom one, so I don't know all the name and particular data about it yet, but it's in the works.
Okay.
And most of it is me calling.
You touched on social media. What are you guys doing on social media?
We do Facebook, LinkedIn, basically all of your popular ones, Instagram, things like that.
Like content, just posting on there?
Just posting, giving something value, a little bit of information on this, or maybe even a funny joke to lighten the mood.
Yeah, absolutely. And you touched on, COVID-19, obviously. You had a lot of face-to-face before this. So what are you guys doing to get past this uncertain period of time?
Zoom meetings is a big part of it right now. A lot of phone calls, a lot of emails. We do have people still coming into the office. Now, we still go to all of our closings. We will actually sit out in the parking lot and at least say hi. We won't shake hands like we used to, but I think it's important for a loan officer to go to all their closings. That just shows that you care from the beginning of the transaction to the end of the transaction. And a lot of loan officers are like, oh, I'm too busy for that. No, you're not. I'm pretty busy. I'm one of the top producers, and I still go to 99% of my closings.
Yeah, it really comes down to if you care, not busy. If you make it a priority and make time for it. So going back to technology, social media, in terms of how it impacts the mortgage industry specifically, where do you see it all going in the future?
That's a tough one to answer. I definitely think that social media and technology is going to be the wave of the future. I've said that brick and mortar loan offices and buildings are going to go away eventually, and everything will be online. And we're trying to adapt to that. But I also think that there's still going to be a need for us to be on the phone or customer service. And there's always going to be people that want to sit down face to face. So 75% technology, 25% old school is kind of where we're focusing our business.
Okay. And what do you think that 75% of technology is going to be? Like just automating tasks, or?
I think it's going to be automated underwriting, basically a Rocket Mortgage, Quickens, that everything can be done online.
So, and then the other 25, you're just saying like the human element that will always be there?
The human element will have to be there because, again, not every client is textbook. If it was that easy, it would have already been automated. There has to be someone there to help you figure out the issues that a computer can't do because they couldn't put that many algorithms in a computer to figure the normal loan process out. There's so many moving parts.
Yeah. So let's go to the buyer side now. Just a few questions on that. Who do you guys work with primarily? Do you guys just work with, general first-time buyers? Who do you guys primarily?
I like to work with, of course, veterans, being a veteran myself, first-time home buyers. I enjoy working with them because they're so excited and they want to do this and that, and they have great ideas. And a little bit, you get to kind of mentor them down to, hey, let's just stay on this path. Let's not have a champagne taste on ginger ale account, if you will. And then the older generation that have already bought houses, they make it pretty easy sometimes because they know what they got to do, the documents they got to turn in. They know that it's not like buying a car where you just show a pay stub and you walk out with some paperwork 3 hours later. It's a process. So as long as they're understanding, we're understanding, we work together, everything goes very smoothly.
Yeah. And so let's say, let's use veterans here. So you work with a lot of vets, you said. What do you see as a big misconception that they have coming into the process before working with you?
Veterans have the misconception that because they're a veteran, they automatically get approved for a VA loan. And there are a lot of loan officers like, oh, don't worry about credit score. Don't worry about debt ratio, because there really is no set number for that. It's all the whole picture put together. So I think that's the biggest misconception, along with the fact that they always want a little bit more than they can afford. So
in many cases, when you work with veterans, is the VA loan always usually the best option for them, or?
99% of the time, a VA loan is the best option for a veteran, unless they have a large down payment. The VA loan, I think, is one of the best products out there.
Yeah, absolutely. In my opinion, it's the most powerful product on the market. And many of the veterans aren't educated. They don't know that they've earned this benefit. So educated in the fact that they're unaware that they have this, that they've earned this benefit. So it really comes down to finding the right loan officer who's fluent in VA loans and can advise them throughout the whole process.
Yes, I've talked to many of veterans that called me for an FHA loan, and when they tell me they're former military, because they're telling me about disability, I'm like, how did you not know about this? Let me educate you here. And I would say 100% of the time we usually go VA loan from a FHA or conventional. Like I said, unless they have a large down payment, which is really going to reduce their payment.
Yeah, absolutely. And last question here: what is the number one most asked question that you received from first-time home buyers?
Do you have any no money down programs? Which of course we do, but risk versus reward, I should say. The interest rate's going to be a little bit higher, but it's going to help you get over that hump. And then normally on the next house, they know that they want to start saving for a down payment, or they use the proceeds, so they have a little bit better interest rate. The biggest hurdle we have with first-time home buyers is they normally don't have anything to stock this brand new house in. So they go and buy stuff once we get them approved. That's the number one thing we have to reiterate to first-time home buyers is you can't go out and buy anything right now. And then I normally talk to my home buyers about actually a real budget, not just, okay, this is what you qualify for, but these are the real cost of owning a house, the trash service, the cable bills, the repairs, the maintenance to the yard, things like that. You're automatically going to want to buy new TVs and furniture, things like that.
Makes sense. So you're more of, a financial advisor plus a mortgage advisor.
Just a friend.
Just a friend.
Just a friend that's been there, has done it, seen people fail from not being coached the right way.
Interesting. Well, awesome. Josh, I really want to thank you so much for coming on the show today. I had an amazing time talking with you, and I really appreciate your time.
Hey, no problem at all.
And to all the viewers for watching, we'll see you again next episode.